Hey guys, what's going on? Wanted to kind of recap the day, give a little bit of a breakdown of some things that are going on, and run through some watch list stuff. Watch list still pretty extensive. There's a mix of, again, kind of the three groups of stocks that I'm looking for. Which the leadership stocks, the stocks that are setting up and emerging, and then soon we're going to get more PR gappers and earning stocks over the next couple weeks as earning season comes. But let's focus on today here. We're up 2.6% heading into the close here. SPY is sitting right around the 50 SMA, slightly below that, on the gap up. As of yesterday, we were just kind of dancing around the, 20 MA, still below the 200 SMA. And, now we're, almost back above all moving averages on this, big gap up. The best thing for this is going to be, we are up near, some ranges, is going to be to, build out a little bit here. You don't need to, though. Like we've seen many of these gap ups have, 1, maybe 2 days of rest and then go and take out some of these ranges. So we're really getting into the point to where, especially if we build out for a few more days or something, but we're getting to the point to where, indexes are going to be mattering a lot less, and this is barring a significant sell, right? So essentially, as long as we're holding the 20 MA, as long as we're holding the 200-day moving average, we're able to really continue to trust the leaders and the setups, like we have been able to for the past few days. I always wish I was going to be more aggressive, when things are working, when stocks are gapping up 10%. I'm always like, oh man, I wish I was, full on, margin. But I'm happy with the way that I've navigated the consolidation and the pullback in the market. And, happy with where my account's at. I wish I had GLW. I should have about a 20% position size in that. Gonna keep trying this AKAM because I really like this setup, but just relax. Again, continue to don't worry about all the headlines and stuff. Just you're gonna be able to see the action on the charts, just because the Iran president's coming out tweeting about the US is not listening to the ceasefire or whatever that the headline is. Like, does that change anything on TER, like daily chart? Does that change anything on Intel? Does that change anything on GLW here? Does that change anything on Fastly, on DOCN, on the QQQ even, really? It doesn't. So make sure that, or VRT, right, or GEV, SNDK, Light, AAOI. I mean, these are like some of the biggest standout examples of relative strength throughout a market-wide correction that I've ever seen. Like, not like I'm the barometer for seeing things, but I thought last year was pretty notable with things like GEV during the tariff stuff. How it just came down to the 200-day moving average, while the market was right well below the 200-day moving average. But these are significantly more standout. I mean, we've got a lot of these stocks at all-time highs, well into all-time highs. Well, the QQQ just remounted the 200-day moving average today. So it's really impressive how much these are standing out. And I know it's somewhat challenging to get positioned because of the headlines and the indexes below the 200-day moving average, and some of the setups and some of the speed at which they're back at all-time highs. But I think you just keep the same approach of, can I get tight risk? Are we pulling back into support levels and holding? Are buyers proving there? Are we holding rising moving averages? Are we showing relative strength? And is there some tightness to the setup, right? And literally that's as simple as it needs to be for now, until something else like happens. until, we get a big sell below the 200-day moving average on the indexes, or until, there's some sort of kill candle, which who knows if that's going to come, right? You can only react to that until there's, some further build out. So really want people to continue to focus internally on themselves versus externally, on predictions of the market, or the news and the headlines, because you can really get into a pretzel-brained spot of confusion and distraction when that occurs. Okay. Some of these, positions that I'm most interested in. Again, although the leaders are, I don't want to say far gone, but past entry points, right? There is still some of these emerging ones. I was saying on Zoom today, kind of like the tier 2, if you will, where, tier 1, TER, SNDK, Light, GEV, maybe VRT, MU, maybe. What else? MRVL, you could throw in there. Dell, you could throw in there. Where else could we go with? Tier 1. Anyways, you've got some of these kind of tier 2 or, emerging stocks that have the potential to become big winners. Still looking, extremely attractive. And, with as little as a few days sideways, could be very impressive. Q, SOLS, CLS. I considered this today. I posted this GEV to CLS comparison, going back to coming out of the correction last year. And if you look at GEV, you can see that the way, we held this 200-day moving average, built out this, range, gapped up here, and then, had this little delayed reaction through there. This was a little bit earlier on in the cycle of for GEV, but CLS kind of reminds me of something similar, where higher low, just a significant relative strength example, higher low above the 200-day moving average, gap up above, all this range, and then maybe we get, some build out and a little bit of a delayed reaction on this. This is what I'm going to be watching very, very closely, and I'm very interested in CLS. Something like MBIS, it showed really good relative strength over the past 4 days. Now, if we can tighten up a little bit up here, we're looking very attractive. This weekly still looks very, very good. I think it deserves to be stay on your radar. Like I said, there's, the watch list construction part is easier than I've ever seen it right now, in probably ever. Besides, I guess, like a raging bull market with, catalysts and like a 200 stocks that are set up and reasonable. Right now is, I think, one of the easier times to identify what stocks are reasonable and worth playing than any other time that I've seen. And I'm just gonna continue to watch these stocks. And I can keep going through them. HUT, I think, is very reasonable as well. Just coming out of this, pattern base, whatever you want to call it. Big gap up, really nice volume. 50 SMA is still flattening and curling up. This is going to give us a setup, most likely, if it's going to work. It'll build out over the coming days and weeks. Wolf has got this big base that it's been, kind of chopping around in for the past, 4 or 5 months. Again, little tightness on the right side. This could be in play very, very soon. And NAVN, right? We've been tracking this one. It's kind of been a bit of a choppy mess, holding over the HVC, still for now. AKAM, is trying to tighten up here on the right side. Might need one more little shakeout here before it works. I've taken a couple, 1% losses on this. Kind of waiting for it. XBI, this is set up really nicely. I think this deserves to stay on the radar for as long as it continues to show relative strength and looking like that. I'm going to skip past some of these chemical and energy stocks. They're moving really nicely off the lows. I'm going to skip past the APP and Palantir, although these are good relative weakness shorts. I just want to kind of get into, the good stuff. Oh, shoot, I started at the bottom of my list. Something like SGML and LAR, the lithium stocks, look really attractive in our setup. Fairly tight for some action. ALB, SQM, SGML, are all potentially ready to trigger, over the next few days. Net was a little disappointing today. Costco is nice and strong today. AKM, tracking that, covered that. I started at the bottom of my list. Let's just speed up towards the top part here. Now we're getting into the good stuff. Twilio was a little disappointing today. I think this mRNA looks fantastic. Again, I think today is the first day that we can really begin to ignore the indexes a little bit. Again, barring something really bad, we can and still awaiting some more tightness. Right, we're up 6 days in a row into a 3.5% gap up, so you can't just be like, fuck it, what's the stock doing? Right, there's some element of that still, but once we get a little bit more build out and avoid a big sell, get it off your screens and just look at stuff like this. Okay, because these are set up really nicely. And again, you've got those tier 1 leaders that are just stand out, smack you in the face, obvious. And then you've got this wider list of tier 2 and emerging setups that I think are really attractive. And then we're coming into earnings season where we're going to get, some ER gappers and some standout stocks. ARM, I would put in that tier 2 list. Like, this is set up really nicely on here. Just kind of sifting through. CGNX is a industrial robotics play, earnings gapper from last quarter. This is yet to be kind of proven, but I'd put this probably towards the bottom of a tier 2 list. Dell I'd put in like tier 1 leadership right now. PL, one of those tier 1 leadership stocks. AMD, a little bit of build out, a little bit of tightness. This one's ready to go again to at least take a look. MRVL, I think, is tier 1 right now. Kava, right? This is, a relative strength, nice earnings gap up, build out, tap the 50 SMA with the QQQ living below, sitting below $90. A little bit of tightness, a little bit of build out, ready to go. LWLG, I put that in tier 2 because I list that as like emerging stocks for potential leadership, nice setups, and then kind of some speculative names in there as well. Rocket Lab, this one I think is very simple. It could be a UNR or a failed breakdown into the 200-day moving average. I think if we remount today's high, I think you can just set alert around today's high, and if you get a delayed reaction, I think then that's actionable. As of right now, this very well could just be a short into the 50-day moving average on Rocket Lab or ASTS. That comes back lower. This is lagging some of the space names. But I'm not super interested in trying that. I got my one short on SOXS, which was nice a week ago or a week and a half ago, whatever. CLS, I think this deserves to be a major focus. NAVN, we already went over that. Something like CCJ, maybe if this continues to build out on the right side, you get some proof from buyers down at support. This could end up being attractive. SOLS, I think is emerging, new stock that very well could become a massive winner. AMPX, I put that in tier 2 as well. Kind of wedging up for now. Going to need this to, shake and bake a little bit, put in a higher low. Then we can go after that. BWXT, nice new highs. Day 1 breakout today on this. Fly needs to tighten up, but this is very, very impressive. Just this wall of volume coming in, making a 50% move here, 70% move. I'm sorry. As soon as this kind of builds and tightens up, this is going to look very attractive. I hope some people are involved in that. Powell, I put in that tier 1 leadership list. MU's a little bit janky. ALM in that tier 2 list, a little speculative. Need a little shakeout, see if this can put in a higher low. Then I think this is good to go. This is a tungsten stock, been tracking for a while. AMAT just trading with the SMH sector, tighten up below all-time highs here, looks very attractive. COHR in the photonics optics groups looks very attractive. SEI looks very attractive. GLW, of course, one of the leaders of the market. So I'd kind of go through and kind of list out, those, 10 to 12 clear leaders, and then list out, 15 to 20 of the tier 2, and then get that tier 3 list for PRs and earnings gappers that you are going to want to track for earnings season. And then that's your list. And then you don't need to focus on anything else. Wait for a little bit of tightness to come in, wait for the excitement to settle, and then execute, right? Find spots where you can risk $1, $2 to $3 and make $6, $9, $12, $15 on the trade. Get that win, get that cushion in. Trail your moving averages, trail the 9 EMA as it comes through your entry, trail the 20 EMA as it comes through your entry and trim, trail the 50 SMA, and then you end up with an account filled with PL, Fastly, GLW, and these winners that are just trailing moving averages, to where your worst case scenario is that you stop for 50% profit, as we go on. So it's just all about focus, all about execution from here. And if the market ends up failing, it is what it is. We've got stops in place. We've got watch list. We've got scenarios mapped out. We just need a little bit of tightness, a little bit of build out, a little bit of calm to come in, and then we can start ripping some things. Okay, catch you guys tonight for the work.